All right, let's do this. Today, we are going to tackle one of the most hyped up and honestly most confusing topics on the planet, cryptocurrency. We're going to cut right through all the noise and give you a simple, responsible guide.
You ever hear words like Bitcoin, blockchain, or NFTs and just feel like you're completely out of the loop? Like you missed some huge memo about magic internet money?
Well, guess what? You are so not alone. It's a crazy, fast-moving world. So our mission today is to demystify all of it. What it is, how it works, and maybe most importantly, what the real risks are.
Okay, so before we can even get into Bitcoin or any of that, we got to start at square one. We have to talk about the technology that makes it all possible, the blockchain. This is the bedrock of everything.
Think about how your money is tracked right now. Your bank keeps a private list, a ledger that they control. It's centralized. You have to trust them to get it right. Now, a blockchain? It's the exact opposite. It's a public ledger. It's decentralized, meaning no one company owns it.
You know, a really great way to picture this is like a magic Google Doc. The whole world can see it, but nobody, and I mean nobody, can go back and change what's already been written. Every new transaction just gets added to the bottom of the list and is locked in forever. That's a blockchain, a permanent, public, and nearly unhackable record book.
Okay, so now that we have a basic idea of the tech, let's talk about the two big kahunas you've probably heard of, Bitcoin and Ethereum. And here's the key. They are not the same thing, not even close. A great way to think about them is digital gold versus digital oil. Bitcoin was the OG, the one that started it all, and its superpower? Scarcity. Just like there's only so much gold we can dig out of the ground, there will only ever be 21 million Bitcoin. That's it. In a world where governments can just print more money whenever they want, this is a huge deal. That's why its main job isn't for buying a cup of coffee, it's designed to be a store of value for the long haul.
Ethereum, on the other hand, is a whole different beast. If Bitcoin is like a simple, powerful calculator, Ethereum is like an entire app store. It's a programmable blockchain where developers can build all sorts of applications. Things like digital art, NFTs, or even entirely new financial systems, what people call DeFi. And its coin, Ether, is the fuel, the digital oil that makes that whole app store run.
So let's just nail this down one more time. Bitcoin is like digital gold. Its value comes from being scarce. Ethereum is like digital oil. It's the fuel that powers a whole world of applications. Totally different jobs. Okay, so that's the what. But what about the why? Why would anyone actually want to own this stuff? What's the potential upside here? Let's look at what investors call the bull case.
It really boils down to two huge ideas. First, decentralization. The idea that you can be your own bank. You can send value to anyone, anywhere in the world, without needing permission from a bank or a government. The second big argument is that it's a hedge against inflation. Governments can and do print more money, which makes the money in your savings account worth less over time. But with Bitcoin, the supply is fixed. You can't just print more.
All right, now I need you to listen very carefully. This is without a doubt the most important part of this entire conversation. We have to talk about the massive risks. This is the bear case, and you ignore this at your own peril, seriously.
First up, volatility. Let that number sink in. When people say crypto is volatile, they're not exaggerating. A drop of 80% or more isn't some once-in-a-lifetime crash. That is a normal Tuesday in crypto. It's a regular part of the cycle. If you can't emotionally handle seeing your investment drop that much, this is not the place for you.
Okay, risk number 2, hacks, and just plain old mistakes. So let's play this out. Imagine your crypto gets stolen, or you fat finger in an address and send it to the wrong person. What's step 2? What do you do next?
Yeah, there is no step 2. Unlike your bank, there's no 1-800 number to call, there's no fraud protection, there is no undo button, ever. The responsibility is 100% on you. When it's gone, it is gone forever. And last but not least, the scams. Man, is this space the Wild West. It is flooded with garbage projects, pyramid schemes, and outright scams that have one goal and one goal only, to take your money. You have to be so careful.
Okay, deep breath. We've gone through the good and the very, very ugly. So, if after all that, you're still even a little bit curious, how can a responsible person even think about approaching this? Let's build a framework.
Rule number 1, and this is the big one, crypto should never be your main plan. Think of it like this. 95% of your money, your core, should be in safe, boring, reliable investments for your future. Crypto, if you own it at all, belongs in that tiny 5% satellite slice, the part for high-risk speculation.
And that brings us to the golden rule, the one you absolutely cannot break. Before you put in a single penny, you have to ask yourself this question. If this money completely disappeared tomorrow, would I be financially okay? If the answer is no, you are investing too much. Period.
So let's say you decide to buy a tiny amount. How do you actually do it? Well, you've got two main options, and there's a huge trade-off. An exchange is easy, it's convenient, but you're trusting someone else with your money. And the saying goes, not your keys, not your crypto. The other option is a personal wallet. This gives you 100% control, but also 100% responsibility. If you lose that secret 12-word phrase, your money is gone for good.
Look, if you're going to do this, here's the dead simple beginner's playbook. 1. Stick to the blue chips. That means Bitcoin and Ethereum. 2. Avoid all the hype around shiny new coins promising to make you a millionaire overnight. 3. Buy a small amount. 4. Secure it properly. And 5. Try your absolute best to just forget you own it for at least a decade. This is not a get-rich-quick thing. And that really brings us to the final, most crucial takeaway. The absolute healthiest mindset you can have with crypto is to see it as a lottery ticket. You buy it for the tiny chance it might be worth a lot someday, but in your mind, the money you spent is already gone. It's a sunk cost. That mental shift is everything.